Welcome to Kitco News. I'm Niels Christensen. Gold prices are holding above $1,800 an ounce, but the question is, how do you play the precious metals market in this environment of elevated prices? Here to talk about his outlook for gold and silver is Phillip Streible, Chief Market Strategist at Blue Line Futures. Phil, it's always a pleasure to talk with you. Thank you very much for joining us today.
Yeah, thanks for having me, Niels.
So we've been talking on and off about 1800, and I mean, obviously you're bullish. Fundamentals, technicals support higher prices, but how do you play the market? I mean, do you jump in here? Do you be more technical? What are you recommending to your clients?
Yeah, it's been really tough to get in. It's easy to get out. I mean, obviously, you just hit a sell trigger, and it seems like anyone will lift that bid there or take the offer. But you look at gold. So we're starting to actually figure out like what's going on with it as far as the psychology of the market here. And what you're seeing is kind of the underlying theme is that you'll get this stronger than expected U.S. economic data or data throughout the globe, whatever everyone's watching. Gold will slip on that. That's where you need to actually step in when it looks its worst and try and buy some of it. Because what happens is you get this better than expected economic data. The fear of missing out triggers on U.S. equities. They sell gold, they buy equities. What happens is U.S. interest rates then start to rise just a little bit. But remember, the rise in the equities, because there's no real economy that's out there that's strong, is all at the demise of the dollar because the Fed is continuing to print money. So what that does is it takes the U.S. dollar lower, real interest rates then go lower, inflation expectations go higher, and that's when that swoop comes in, and that's what powers gold to the new high. So, generally I like to stay with the trend of the market. And, most of the time, if you know me from other markets we trade, we actually buy those 52-week highs. We buy the breakouts, things like that. But it just seems like I think this could be kind of the first time where you look at buying those dips and you're just getting it at a better position on a wave up.
So basically, interest rates are going to remain low even if the U.S. economy starts to improve.
They're saying that, look, the employment rate's going to be low. The economy is going to be quite weak for a long time. You have this massive debt that is, financed this fiscal stimulus, and the low policy of interest rates is going to go on for multi years. So that's why I think like $2,000 in gold, when I was seeing it at like 1,600 by the year end, when we were starting to see this turn happen, it seemed like it was like a pretty, a bit of a long shot. I'd actually get criticized on it. But now if you look at like the math and you do it on how we could achieve there, it's not many dollars per day from here to the end of the year. It's probably less than $1 a day for that gold's got to go up. And gold has actually been, having these larger ranges of things. So I think it'll hit the 2,000. I think that you go into like Q1 of next year, Q2, that's where we get 2,250, 2,500. But remember, gold, it will peak. You can hold on to it forever. We'll probably have another crisis and things like that. But gold prices will most likely peak when they do have the vaccine. But only under the sense that they can remove these stimulus measures. That's when you see the sell-off. But you know how it is. I mean, the Fed's like a junkie. They continue to put these methods in, and then the methods tend to stick.
Well, I mean, yeah, we saw that in following the financial crisis. You look at the temper tantrums. I mean, it took 10 years for the Fed to try to normalize interest rates. From the financial crisis, and they backed off that last year. It makes sense. But I'm sort of wondering if markets aren't already pricing that in. I mean, we're seeing equities rallying a lot. We see the NASDAQ hit record after record, day after day. Is that something you pay attention to, or is it more the yields and the U.S. dollar that we should be paying attention to when it comes to gold?
If you go in the case of the NASDAQ, it's like, okay, I think that some of these stock indices are probably overhyped. Some of the stocks that are inside of those indices, you start looking at and I don't mean to pick on anybody, like cruise lines. There's no cruise lines that are even going. Airlines are at this minimal amount of capacity. So and a lot of companies out there aren't providing any kind of earnings guidance. So you're basing prices on really like nothing tangible at all. Okay, so there are some stocks within the equity indices that are overvalued, but then there's stocks like, I was a bear on Peloton. I mean, just buy a bike. Just pay why are you going to pay $2,000 for a bike and things like that? Subscribe to all these things. I thought it was a failed business model, and then here you get COVID, and it's like, wow, this thing maybe is like a legitimate business model. Things like Zoom. Normally, I'd be standing on the floor of the CME doing this interview. Here, we're buying all this equipment. We've got these microphones. We've got these backdrops. These are all like different things that we normally wouldn't have that we're buying. So there are stocks and companies out there that have now validity and strength. So the equity markets, those are a little bit, they have gone up quite a bit, but maybe some of the valuations have changed. I still think you look at the US dollar, you look at interest rates long out, until those things change, we're going to continue to flow in this path of higher with the metals.
Mm-hmm. Well, I mean, and do you think the US dollar has more downside to it? I mean, we have seen sort of the sell-off the last few weeks. And I'm sort of wondering, I mean, if, and I guess especially, like, does it all sort of depend on sort of COVID? I mean, we sort of see the headlines of, the US having, worse stats than when the pandemic first started now. Does that weigh on the US dollar?
See, I think that a lot of people are trying to figure that out. Like, how is the Fed going to do more stimulus measures? Are people like legitimately going to get another check? Are we going to be locked down for many more months? What will happen if, President Trump isn't reelected and Biden gets in? Does he implement more socialist measures, which has more, U.S. dollars being created, more monetary easing, more of these socialistic policies, and then gold even goes higher up from there? Does inflation really kick in? There's a lot of different like ifs and whats that are going to occur. It's I think that the long side is the appropriate way to be right now. The buying methods have been much more difficult. That's why you got to look at those really smaller contracts. That's why we've been a little bit more gun shy. We don't normally just run and jump into the deep end of the pool. We stick our foot in the water and say, hey, this thing warm, cold, as it get acclimated to the current, the current that's there. And then we get into the pool. So, gold, we've been waiting for more of a pullback on support, but it's going to have to be after some kind of wicked economic data, like, those initial claims or, an inflation data, something like that to get in.
Where do you buy? So on a pullback, like, do you expect support to hold at 1800? Are you buying just below there, or do you want to see a pullback to 1750? And does it even get there? Like, we just see a lot of aggressive buying in the marketplace. Yeah. So I'm sort of wondering, like, how aggressive do you be?
There's a couple things. Okay, so you look at 1800, all right? I got to think that, like, there's probably a lot of people out there that bought gold, they have a sell stop below 1800. So if we go down to 1800, chances are we're going to fish below it. So I would be buying, if I was forced to buy at 1800, I'd probably try like 1796 and end up getting filled on there. You look at some of those key levels of support, it seems like people have been front running them, the like 1770, 1751. Those are some levels where I would want to stack some buys in. So they might have to be adjusted a little bit. I was looking at this report, and it was really interesting. I stumbled on it, and it was CTAs, Commodity Trading Advisors. And normally when they get hot on the market, we start to see like the volatility, the average true ranges come up quite a bit. And they take the maximum position that a CTAs collectively had, and they count that as like 100%. Okay, and then they say where we're at right now, and gold is at like 48% of whatever the largest percent is. CTAs are involved with. Silver is the interesting one because it was actually negative 5% on whatever the max amount is. They have like hardly any weighting whatsoever. That number in the last week has jumped to like 20%. So these CTAs are all jumping in, and it's almost like the Robin Hood guys with the stock market, buying at all costs, buy anything. And it seems like CTA trend following systems are now all of a sudden emerging in gold and specifically silver.
Well, let's look at silver. I mean, what are your thoughts on that? I mean, we saw a big push last week, prices above $19 an ounce. Is silver the metal that maybe we should be looking at for the value?
I'm like so confident that it's going to be and I've been wrong in the past. I'll probably be wrong a million times going forward, but I'm so confident that this is going to be like the best performing metal out there. You saw copper already take off to the upside. It's playing this faster than expected economic recovery, right or wrong, it doesn't matter. But you've got the industrial demand picture, which that tends to pick up first. That's what governments focus on is the industrial jobs, because every one industrial job that's created, it creates like 7 more outside of it. You create this widget, it's going to take 7 other people to build these other things that the widget goes into. So that's one aspect of it. And the 20% investment demand, I think, is starting to pick up, where people are like, oh man, poor man's gold, let's buy into it. So I think once you get those two moving together, you get an explosive situation. And I'm not really like a miners guy at all, but I just know that these mines are practicing this social distancing measures and all this other stuff. So your mining output is coming down, and they're saying that like the cost to produce 1 ounce of silver is like north of like $22 or $23. So whenever I see these things, generally the price rises up to that cost of production, or they shut down the mines, and then the price will naturally go up there anyways. So I just think that silver has great bullish momentum behind it. That's another one, though. I really want to get it, but I don't want to get it in the 17s. I don't want to be buying north of $20. North of $20, I might as well just go buy coins and things like that, because that's where they're priced at anyways. I got to call a coin shop, see if they're in the 30 handle yet.
Okay, so last time we talked, you said your long-term forecast for gold was 2,500. What's your long-term forecast for silver? We never really got there, so I'm sort of wondering.
I think I had like $20, but if you look like the December contract, it's like already at $20. So I think that 2250 is pretty realistic because of the production costs and things like that I was saying. 25, but I mean silver, man, I just remember trading it when it just went up to like 60, and it felt like that was like a week. So I don't really have like this an upside target. What am I going to say? It's $30 and that's at 40 in 2 days. I think that the upside of silver is probably, you're going to have to look at the gold silver ratio. Those are probably going to come back in somewhere. If you look at that chart, it went up to that 126, dove down to 92, went back up, and now we're at 92 and it's breaking. So I would use the gold silver ratio to try and figure out where silver's target at. So maybe Friday I'll put out an article on where silver could go, like do some quantitative methods of getting that price forecast.
So I guess bottom line is gold is going higher, but we still have to be tactical.
Yeah, definitely. You gotta buy those pullbacks. Don't chase it. That's like, you might get lucky and catch the wind behind it. People chased copper and they did pretty well. But, I think that, there's other metals that are out there that are pretty good, like platinum. That's another one a lot of people don't talk about. That one tends to mirror some of these other industrial metals. It's been a lagger recently. I think that if you look at buying these corrections in some of these metals when they do come, and I think that you look at volatility in the markets, I think silver, I wouldn't be surprised to see silver down like 75, cents in a day. And it's not like market manipulators, short sellers, these guys. These are just people. These are chasers. These are people that, like Robin Hood guys, they chase it all the way up, and then the second it breaks through, they're into something else. They'll sell it. It'll have a washout, and that's where you got to have some powder dry, step in and buy it.
Phil, thank you very much. I think that's fantastic advice for the investors in this environment now. I mean, we've waited a long time for $1,800 gold. So it's thank you very much for speaking with us today.
Yeah, thanks for having me. I love dealing with you guys.
Excellent. We'll definitely have you back sooner rather than later. Thank you very much for watching Kitco News. For the latest in the precious metals markets, go to kitco.com. Stay safe and stay healthy.